All right, so this is pre-market on bar replay mode. Coming into today, this is ES and Q. Really what I wanted to see is this yellow circle up here. That is a 15-minute, and also this blue shaded area is a 1 hour fair value gap. So ideally, given price action, we were rolling over. We had prior day's low, and we also had a no wick 1 hour candle with a 1 hour fair value gap underneath. So ideally what I wanted to see is this liquidity get taken, roll over, and come down to this zone. And kind of similar here, as you can see, NQ actually came up. ES was the weaker asset, so if I was going to take shorts, it was going to be on ES. NQ took my draw. So at this point I was definitely leaning more bearish. We'll take a look at market open here. So market open, we leave London lows, and we do exactly what I was hoping to see, to an extent. So as you can see here, we leave this 5 minute fair value gap. We never actually make it up to my draw, which was, well, we did on NQ. So NQ did take it. So I was like, okay, we do have an SMT here. The shorts they're still valid, but I just need to see my entry criteria. So we get this large candle down, and there's just nowhere for me to get in the trade. So I have the green light to take it here. So we come down, we inverse this 5 minute, and my draws are still available. So at this point, I'm just waiting to see how the 5 minute candle closes. And I ended up taking this just because we came back up, went to 50% of the wick here, and then closed below this 5 minute fair value gap. And at this point, we had already had a change in state of delivery, and I thought we could easily come down to take these obvious targets. And as you can see, NQ, we're respecting this 5 minute fair value gap here, and it wasn't to be. And let's see what happened. So kind of what I'd marked out in pre-market exactly happened. So it's like, there's a lesson here. Like, if I just waited and just been very patient with my draw, there would have been an awesome opportunity here to take this short. And really, I've marked this out in my notes before. We have a very pivotal moment this afternoon. We have not FOMC, everyone knows there's not going to be a rate change, but this is the first FOMC meeting with Kevin Warsh as the new FOMC chair, and really his commentary is going to dictate how Fed rates are going to be looking during his term, and feel his tone and where he's moving with things. And it gets a little bit more interesting because the fact oil has now dropped from, it was in the hundreds, it's now down to $75 a barrel. The fact oil has dropped down to $75 a barrel removes a lot of the inflation worries for the Fed. So I'm sure he recognizes that, and if he comes out somewhat dovish in his at 2:30 today when he gives his speech after, they're going to hold rates the same. And if he's anyway dovish, the markets they're gonna boom. But leading up to a meeting like that, this is the AM before that. So typically in the AM before a meeting like that, what happens is you have these seek and destroy profiles. Like this, like, I know I'm not the only trader that took this. Like, for price to come down, like, here's prior day's low with a strong draw below. We have a bunch of, I know I'm taking shorts in an overall bullish market, but the criteria to take this trade was there. But typically before a meeting like this is what you're going to see. You're going to see, like, look, it's up, down, up, down. We edge liquidity every time, and it's just generating liquidity, and a lot of that will be ran through at once he gives his speech today, and tomorrow we should have somewhat cleaner conditions, and obviously with a shorter week as well. So yeah, like, I'm not really, like, I did size down a little for this trade. Like, it had merit, there's no doubt about it. I'm not overly mad about it. And also my pre-market analysis was perfect. Like, it's all playing out here. There's that yellow circle I was telling you about here that I wanted to see get hit. and we can probably look at it here now. So as you can see, this is the candle where I go, okay, there's enough momentum in this candle to see follow through if I get my entry. And that's why typically this is the 10-15 close. So many times I told myself in my journal, just wait for the 10-15 candle to close if you're anyway iffy, and then play off that. It was looking pretty sweet on the 5 minute. I'll give myself that, and then there you go. Came right up to that circle I had marked out, and now we're gonna fly down into here. Here we have a 1 hour fair value gap with no wick, which is a fairly high quality draw, and we've got plenty more liquidity down here. As you can see, it's probably easier to see in the 4 hour. And that's why I was bearish coming in today, because if you actually look at the 4 hour here, what we did overnight is came down, took this 4 hour fair value gap, saw some bullish momentum off it, but we really struggled to get above what mattered, which is this 4 hour here, and we played down, and yeah, here's the trade. Here's my trade hitting now if I just had a little bit more patience. But it happens, it's kind of sucks. A losing trade Monday, no trade yesterday, losing trade today. Again, none of them were full size, which is great, but it just sucks to have to be midweek on a shorter week and to be down 1.5 R. It's not the end of the world, but yeah, there you go. There's that trade playing out. I was like just unlucky. Again, we did have an SMT here, as you can see, and listen, you can't win them all. It just sucks. And honestly, I think going forward, I really might just sit out the mornings of Fomc, because this has happened to me one too many times at this point. And there's enough high quality days to catch great trades, and it's just as I said, this trade has merit. That's a trade most will take. Break a structure, come back up, fill the imbalances with a strong draw. You can't be mad for taking that. Just with an SMT, with ES NQ at the highs on the more bearish asset, it's a good trade. You just can't win them all.